Financial Statements by Darren Knoll. Today we will learn about the four main financial statements. There are four financial statements that are learned in Accounting for Business Decisions A. These are the Statement of Comprehensive Income, the Statement of Financial Position, the Statement of Changes in Equity, and the Statement of Cash Flow. We start off by looking at the Statement of Comprehensive Income. The Statement of Comprehensive Income is a statement that reports the profitability of a business. It is also known as the income statement or profit and loss statement. This statement measures a business's revenues and expenses over a period of time. The statement comes in two forms, single-step and multi-step statements. Single-step statements are simple and just calculate total revenues and expenses, while multi-step calculates income by grouping certain revenues and expenses together in order to calculate many subtotals of incomes, for example, gross profit. The next statement is the Statement of Financial Position. This statement summarizes a company's assets, liabilities, and equity at a given point in time. It is also known as the balance sheet. The basic equation is assets equals liabilities plus owner's equity. The Consolidated Statement of Financial Position groups accounts of similar nature and reports them in a few major classifications. For example, current assets, current liabilities, non-current assets, and non-current liabilities. The next statement is the Statement of Changes in Equity. This statement shows how equity accounts have changed from year to year. It therefore focuses not only on retained earnings, but also on other equity accounts relating to a company's contributed capital. It is calculated by taking your opening retained earnings, then adding net profits or subtracting net losses, and then subtracting dividends, which gives you your end retained earnings. The last statement we look at is the Statement of Cash Flows. This document shows a company's cash inflows and outflows over a period of time. This statement is categorized into three sections: operating activities, investing activities, and financing activities. There are many links between financial statements that we have talked about. Some of these links are that in the Statement of Financial Position, the retained earnings come from the Statement of Changes in Equity. Also, in the Statement of Comprehensive Income, the total profit or loss goes to the change of equity. Another example is in the Statement of Cash Flows, where the ending balance on the cash flow statement should be the same as the balance in cash on the balance sheet. And lastly, in the Statement of Changes in Equity, the end retained earnings goes to the balance sheet. Thank you for listening.
Created using Powtoon.